people ask me one thing I wish they'd know that I don't see commonly mentioned. There's a natural tendency to assume in technology that new things displace old things. So people naturally assume that, okay, Bitcoin is cool, but it's 16 years old. Why shouldn't I assume some of these newer ones are better? And my general answer to that is the main exception for that rule of newer technology being better is communication protocols. I would advise people against unit bias. So, we look at it as 21 million Bitcoin, but it's actually 2.1 quadrillion units. In the actual code, that's the actual unit. It's just the underlying Satoshi unit that we call it now. Satoshis are still very cheap, and I think the network is still very small compared to what it could become and what it should become, as long as some core tenets of it keep working as expected.
Bitcoin is on the verge of revolutionizing the financial world, and this time, it's no drill. After 16 years of steady growth, the most powerful cryptocurrency has evolved from a fleeting trend to the future of money, and the world is finally waking up to it. While Bitcoin's 21 million supply cap is impressive, the real brilliance lies in its 2.1 quadrillion Satoshis, the smallest units of Bitcoin. This makes Bitcoin infinitely divisible, able to scale from tiny transactions to massive institutional buys, something no other currency or asset can match. Unlike the volatile altcoins that rise and fall with the latest trends, Bitcoin's strength is rooted in unshakable fundamentals: decentralization, security, and a predictable scarcity that positions it as a safe haven in a world plagued by inflation and mounting debt. While traditional financial systems crumble, Bitcoin remains a steadfast anchor. According to Alden, this isn't the end of Bitcoin's journey, it's just the beginning. As global adoption continues to soar, Bitcoin is set to become the backbone of the global economy. Once Bitcoin reaches critical mass, all hell will break loose in the markets, sparking the biggest financial shakeup in history.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
The downside is that printing the difference negatively affects some people, particularly anyone holding cash, anyone holding bonds, basically the people that are holding parts of the fiat system, or that have their income denominated in it. A thing I like to point out is that whenever you have a expanding money supply, it benefits one side. Like every contract is now affected by government decisions that affect debasement. So everybody's wage, as well as different businesses, if they have kind of multi-month or multi-year supply contracts with each other at certain prices, these are fixed things. And for example, if you're an employee and you get a certain wage, and the money supply is growing every year, the burden is on the employee side to try to increase their wage every year, whereas the employer has the built-in advantage of the, kind of the status quo. And especially we talked about how there's a difference between money supply growth and CPI. So it's easier for the employer to point to CPI and say, well, maybe I'll give you that number. And so it kind of airs the power toward one side of a contract when this happens. And so that's the cost of debasement, is that, especially if you were to steelman what they're thinking, they think that they often can deploy resources better than the private sector. And so, if Marcus Aurelius is running the economy, maybe he's if some like outlier capital allocator is the one that happens to be debasing everyone's money and making decisions, then sure, maybe that one time out of 100 actually works out. The problem is that the vast majority of political systems are not going to be particularly efficient at capital allocation, that there's going to be some spectrum of error in the system, and then that's what leads to prices going up for everyday people. I think it's the best tool that's available. I don't think it's a silver bullet for every single thing. So for example, that probably mentioned with wages, if you earn X amount of dollars per year and money supply is growing at a certain rate, you may still have trouble with your employer getting the wage that you deserve to kind of keep up your share of the ledger. That's still a challenge, but at least it helps with the savings side of the problem, which is to say, if you're looking at things you could purchase, like a savings bond that's giving you interest rate below the money supply growth rate, or a savings account, or a very highly valued equity, or a very highly valued house, that's not immediately meeting your shelter needs. Bitcoin is a very powerful savings device. the fact that it has no long-term supply growth once it reaches its total number of units, and there's also and this is where it gets challenging because there is like an early advantage, which is to say that right now you benefit not just from Bitcoin's qualities, but the fact that it's being recognized by the world for its qualities. So there's a gap between what this network, how cool this network is basically, and the world kind of over time, because these things can take a generation or two to test its qualities, come to appreciate its qualities, and then for many people grow up with its qualities. So changing is always harder than just growing up and something exists. And so Bitcoin has to go through some maturation process. And if people are feeling disenfranchised, they tend to look a little bit more for non-traditional solutions. And the risk there is that they could fall into scams and other kind of false promises. And that's where I think Bitcoin really threads the needle, which is to say, this is the most powerful thing around. A lot of intelligent people have looked into it from a variety of different backgrounds and said this is actually a pretty powerful thing, and that it can help you as long as you, I think, approach it kind of humbly, and as long as you don't then push further into kind of things that end up actually being frauds and scams and things like that. So I think this is in the near term, I think it can help people individually. And then should it become large enough and should it become something that people just kind of naturally grow up with, I think it can affect things at a more macro level, for like our children's generation and grandchildren's generation, hopefully. So I classify it as an emerging store of value. So it's an emerging savings technology. If you were to say in 2011, so 2 years after it came out, is this savings technology? I would say at that point it's very early. It's not been tested, in many different scenarios yet. The legal status was very unclear. It's a very small, highly volatile network. But every year that goes by, and as the asset becomes more liquid, more widely distributed, tested under different conditions to see all the different ways that the network holds up against what life throws at it. As we're now like 16 years in, I think it has transitioned more toward savings technology as something that can be relied upon. And I still think it has a ways to go. That volatility can shake people out, and it does require more research and conviction than what we normally think of as a low-risk savings asset in order to get in. It takes some degree of unconventional thinking or willingness to think outside the box to, be meaningfully interested in the network before the majority are. And so I think that's probably the best way to think of it, is that there's a spectrum that Bitcoin is going through, and as long as it continues to be successful at the things that it's doing, it moves that dial from early speculation, statistically this probably won't work out, but maybe it will, to, hey, this thing has been functioning for 16 years. It has higher uptime than Fedwire. It's been the largest, most liquid, secure cryptocurrency for every one of those 16 years. That's not the same asset per se as it was, 13, 14, 15, 16 years ago. And I think it'll, as long as it keeps growing and solidifying, it'll be a different asset at year 25. And that's how I approach it.
Inflation quietly drains wealth from savers and wage earners, shifting the balance in favor of debtors and institutions. Meanwhile, workers struggle for raises that never seem to keep pace. Bitcoin presents an escape. With its fixed supply, it's the ultimate inflation-proof savings tool. After 16 years of growth and reliability, outperforming even the Fedwire system, Bitcoin has evolved from a speculative experiment into a trusted store of value. While Bitcoin won't fix stagnant wages overnight, it offers what fiat currencies can't: a fair opportunity to preserve and grow your wealth. Forget traditional hedges. Bitcoin isn't just protection against inflation, it's a way out of the fiat money trap. While it doesn't always follow CPI data and can even drop when interest rates rise, its true strength lies in its fixed supply, standing in stark contrast to endless money printing. Volatile? Absolutely. But that's the price of going from zero to global reserve asset. Start small, learn quickly, and hold tight. According to Alden, this financial revolution won't wait for the skeptic.
So a hedge generally has a pretty specific meaning in finance, which is something that pays off at the moment of a certain thing you're worried about happening. So for example, if you own the S&P 500, a hedge might be that you buy put options on the S&P 500 that pay off if the S&P 500 goes down. That's a very specific hedge. There are other hedges that are maybe not that specific, but there's still very high probability to pay you at the period of time of something you're concerned about happening, kind of like insurance. Bitcoin, I don't classify as a hedge per se, because there's multiple variables that go into its price, and it doesn't have a very high correlation with consumer price inflation, especially because the way that the market works, when it sees inflation, consumer price inflation coming in higher than expected, their natural reaction is to say, well, the central bank is going to have to raise interest rates then. They're going to have to try to harden their money. So maybe I should sell some of these, other types of assets, or my liabilities might be getting a little bit harder because they're going to raise interest rates. And so I wouldn't classify it as saying if you're worried about CPI inflation, this year, Bitcoin is not necessarily going to be going up and down at the right times for you. I go back to that emerging store of value thing, which is to say that there's this network, it's the best in class at what it does, and it has a fixed number of units. In contrast, all these different fiat currencies in the world, of which there's over 100, all inflating in supply at different rates, and that Bitcoin protects you from that long-term monetary debasement if you're willing and able to withstand some degree of volatility along the way, because you're also dealing with the fact that the world is gradually understanding what this asset is. Another thing I like to point out is that in order to go from worth zero to worth trillions of dollars, Bitcoin needs upward volatility. And any upward volatility is going to attract speculators and people who buy it on leverage. And eventually that can get overdone for periods of time. And then unfortunately you get downside volatility. So there's no realistic scenario where you get upside volatility that we want and that the network needs in order to get large enough, without those periods of washout and downward volatility. And that's why it can seem like a speculative asset. I also think that there are certain assets that can seem speculative if you haven't researched all the properties. So years ago, if people said, I think the big tech stocks are speculative. Well, if someone did a ton of work and said, I have a pretty sound thesis why I think that these things are going to get bigger than anyone thinks, that they're solving bigger problems than the average person seems to realize. And here's my reasoning, and I'm looking at their balance sheet and their fundamentals, and here's the price to earnings multiple I'm willing to pay. Whatever research they do, they're not really viewing it as a speculative decision unless they're leveraging it or taking on too much risk with the thesis. And Bitcoin is similarly. I think that there are a lot of people that they haven't ever sent a Bitcoin transaction. They haven't really analyzed what are the network effects involved that can differentiate it from other assets. How does mining and nodes work? How does the network work in principle? Why is it different than a different cryptocurrency? What are the trade-offs if you change any of those variables? There are a lot of people that, for a variety of good reasons, haven't done the work on that. They're too busy being a doctor or a mom or a chef or any number of things that life throws at us. They just, like, I can't tell you everything in my car how it works either, right? So there are a lot of people that just, for whatever reason, haven't done that, and there some subset of them will call it a speculation, which I think is generally not the case, other than, again, at the really early stages when there was a higher probability of failure. I think there's a danger at buying too much that exceeds your conviction level or your volatility tolerance, because you're more willing to get shaken out of your position at a loss or during a big sell-off. And so I generally don't think it's right to kind of rush in more than you're comfortable with. I think initially the pretty low-hanging fruit is to get off zero. That there's a lot of right answers for how much Bitcoin you should have. But I think that if anyone who looks into it generally finds that the zero is not one of the right answers. So I think get off zero. And then there's a couple steps you can make. You can experiment with it to some extent. You could buy some from an exchange or a brokerage and then pull it into your own self-custody and try sending a transaction with amounts that you're comfortable with, given the research, with like a simple mobile wallet, and you can graduate toward more secure options for larger amounts if you decide to go that route. You could also invest some time into reading a handful of Bitcoin-related books. It's not necessarily the first thing you want to do is, if you want to get them into Bitcoin, you don't necessarily shove them a 400-page Bitcoin book. But if someone, for example, watches this podcast or watches your series or is otherwise interested in the asset, I think the next step is to spend a weekend, read a couple high quality sources on it, so that you get more of the details than we can cover in a conversation like this, and then consider getting off zero. And generally, the more you learn, there's some research that shows basically the more someone is knowledgeable about Bitcoin, the larger share of the net worth it ends up being. So my general view is that if there's a time where it makes sense for you to increase your holdings substantially, I'm not the one that tells you that. You're the one that figures it out for yourself and decides that your level of understanding or comfort with the asset has increased, and therefore a larger position might be right for you.
Fresh data suggests Bitcoin may be gearing up for a significant rally in the second half of 2025. U.S. exchange transfer volumes are showing early signs of resurgence, with analyst Axel Adler Jr. pointing out that the U.S. versus offshore ratio has reversed its January downtrend, historically a signal of an impending bull run. This shift coincides with a key technical crossover, as the 90-day simple moving average has moved above the 365-day simple moving average, a pattern that previously preceded Bitcoin's explosive rise from $60,000. On-chain data adds to the bullish outlook, with exchange reserves falling to 2018 levels, leaving just 2.43 million BTC available. The stablecoin supply ratio at 14.3% indicates plenty of capital ready for further buying. Lyn Alden views these trends as markers of Bitcoin's maturation into a scarce, institutional-grade asset. Additionally, Bitcoin's reclaiming of the monthly VWAP as support, something unseen since January, suggests the path to $90,000 may soon clear. While caution is warranted, with some analysts warning of a potential bull trap around the $86,000 level, the technical indicators and dwindling exchange supply point to Bitcoin solidifying its store of value status. As Lyn Alden puts it, Bitcoin is an escape from fiat. Do you see it as part of your savings strategy? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.